Okay, it's a minute past the hour, so let's start. So welcome everyone to the first in a series of 5 talks from Beale & Co. This is our Masterclass autumn series. We're obviously starting off today with our cyber and ransomware seminar. Just to let you know, the forthcoming talks in this series over the next few weeks to be delivered by my colleagues at Beale & Co. include the construction and the cladding crisis, the current issues affecting the solicitors' PI market, the health and safety and D&O issues coming out of the Grenfell tragedy, and then finally the current state of the PI market and the challenges being faced by insurance brokers. So, turning to today's seminar, ransomware and recovering ransom payments. Let me start by introducing our speakers. First of all, I'd like to give a warm welcome to our guest speaker, Phil Larratt from Chainalysis. Phil has a long history of working in the cyber area and on cybercrime issues. He is a public sector operations manager at Chainalysis, where he works with law enforcement, government agencies, and various other organizations. And prior to joining Chainalysis, Phil was a senior manager in a national cybercrime unit at the UK's National Crime Agency. And Phil, probably as much as anyone in this industry, has a long history of investigating cryptocurrency-related crime, at least since 2014, and he has led multiple high-profile ransomware, product contamination, money laundering, and dark net market investigation. So we're very happy and pleased to have Phil with us today. And speaking to us today on some more pure legal issues, we have one of our very own senior associates here from the London office at Beale & Co, Andy Jones. Andy deals with cyber investigations, regulatory notification matters, the defense of cyber-related and third-party claims for insurers and insureds, and also cyber coverage matters. And for his sins, he's also the only Wrexham football fan currently resident in London. I have that on good authority. And then finally, myself, I'm a partner, Stephen Reilly, in the London office of Beale & Co, working in the insurance space, including cyber matters. And I will be your moderator for today's talk. Now, first of all, ladies and gentlemen, just a quick format issue. We're going to try and take questions as we go along today. That's not always easy with the technology, but if you do have a question as you go, please type it into the software. It should appear on our system, and if things work out okay, we should be able to take those questions as we go, or at least a sample of them. And to the extent we can't do that, we'll try and circle back at the end to take questions, and worst case, if we can't do that for any reason, we're always available after today's event and over the next few days if anyone wants to follow up with Phil or ourselves. So just moving through the slides, what are we going to cover today? We're going to talk briefly about ransomware and some insurance market trends. We won't spend too much time there because most of the audience will be familiar. Phil is going to take us through some really interesting de-anonymization of the blockchain, and we're specifically going to focus on Bitcoin for today's purpose, and how what appears to be gobbledygook to the rest of us and anonymous transactions can actually be de-anonymized at some level to aid recovery actions. Andy's going to talk a little bit about how English law treats cryptocurrency and specifically Bitcoin and why that matters. We'll be talking about the legality of making ransomware payments, both here and in the US. And feeding into that issue, we'll also be looking at sanctioned individuals. As I'm sure you know, when looking at making a ransomware payment and the legality of it, the question of sanctions is very important. So we'll look at that both from a legal perspective and from Phil's expert perspective, where Chainalysis can help in identifying where your ransom payment might be going and whether that might be a breach of sanctions. Then we're going to have a look at, again with Phil, with hopefully, if the software works, a live demonstration of the Chainalysis software, where Phil will talk us through an actual study case of tracing stolen or ransom Bitcoins through the blockchain. And then finally, we'll wind up with Andy again, looking at the legal routes to recovery, the types of legal tools you can bring to bear when you're trying to recover stolen or ransomware Bitcoin after you've hopefully identified where that Bitcoin might be residing on the blockchain through Chainalysis's work. So let's just set the scene a little before we get into the detail. First of all, a salutary lesson from history. If we just move those slides on, please. This is a lesson from 500 years ago, which is worthy of remembering. This is a picture which depicts the capture of Atahualpa, the Inca emperor in 1532, captured by the famous conquistador Francisco Pizarro. Now, he paid a ransom to free himself to Pizarro. Apparently, it was a hall full of gold and 2 rooms of silver up to the height of his arms. And in today's money, that equates to allegedly $1.5 billion. And the Guinness Book of Records says that that is the largest ransom ever paid. Now, this is a salutary lesson. Be careful paying ransoms. And this is true 500 years later with ransomware, because unfortunately this ransom payment didn't work. And Pizarro shortly afterwards executed Atahualpa and the Inca Empire fell. And this has echoes of what goes on today with ransomware, because even if you pay the ransom, that doesn't always work. You've got to remember we're dealing with criminals here. You may not get the decryption codes back. You may not get all your material decrypted or your data back, and it may not be in usable form if you do. And they may still leak your data, and they may still come back for more money if they view you as weak. So it's a very difficult area to tread, even if you think the easy answer is to pay a ransom. And why is ransomware exponentially increasing in the last couple of years? Well, there are a number of factors that converge really to explain that, particularly through 19, 20, and 21. We've got the increased professionalism of these ransomware gangs. That these people turn up to offices and work 9-to-5 jobs, supported with significant funds from mafia organizations. We've got North Korean government departments involved. Cryptocurrency, of course, aids the ransom part and is an important part of the business model, allowing some level anonymity to the proceeds you steal. We've got ransom as a software being hired out from sophisticated criminals to less sophisticated criminals, making the barriers to entry for this kind of crime lower. We've got double extortion going on, so it's as well as the threat of, or as well as the locking down of your data and your systems, we've got the threat of leaking data. Now, all this has led to Kieran Martin, the former head of the UK National Cybersecurity Centre, to say, quote, ransomware is close to getting out of control, and insurers are inadvertently funding organised crime by paying demands. So we are in the middle of a maelstrom at some level in ransomware. And let's just remind ourselves on the next slide, if we need it, of some of the more recent events. Just put up a few there. They're only in the last few months. Obviously, this is the tip of the iceberg. This is happening every day. Not all of these events are being reported, but those are some that we've all seen in the press recently, and particularly those ones closer to home in London with 4 New Square and other barrister chambers, which we'll probably all be familiar with in London, using those counsel. Now, let me bring Phil in at this stage. Phil, can you tell us, please, just at high level, what it is that Chainalysis do in this space? And I know you've got some interesting data which shows how ransomware is becoming an ever greater proportion of the total cyber crime that's out there, and how cryptocurrency is obviously an important part of that ransomware crime model. So over to you, if you could take us through some of that, please, Phil.
Yeah, thanks, Stephen, and thanks for the earlier introduction. I think first and foremost, I'd like to introduce the company that I work for, Chainalysis. So we are the blockchain data platform, and we provide data, software, services and research to government agencies, cryptocurrency exchanges, financial institutions, cybersecurity, and insurance companies. And we now have over 500 different customers across over 60 different countries. And our data platform powers investigations, compliance, and risk management tools that have been used to solve some of the world's most high-profile criminal cases involving cryptocurrencies. And they've also helped grow consumer access to cryptocurrency technology safely. And we support 14 different blockchains and over 100 different cryptocurrencies and tokens. And for those of you who don't know what a blockchain is, just think of it as an immutable public ledger of all cryptocurrency transactions that have ever taken place. And we've been collecting blockchain-related data since the company was formed in 2014, and this enables us to assess trends and provide some data-driven insight into threats such as ransomware. I'll just move on to the next slide. So in our crypto crime report, which is publicly available, and it was released in March of this year, we called 2020 the year of ransomware. And from a data perspective, as I'll show over the next few slides, that was definitely true. But as a former operational law enforcement officer, it certainly felt like that on the ground. And when I was part of the National Cybercrime Unit, we seemed to be dealing with sort of a high-profile incident every other day. And as you can see from the graph on the screen, there was a 344% increase in ransoms paid in 2020, and that equated to approximately $320 million that was paid in 2020. And as Stephen touched on before, why this very dramatic increase? Some of the points I'll touch on: the growth of the ransomware as a service model. As Stephen said, it's lowered the barrier to entry, and affiliates with relatively sort of limited skill sets now can deploy ransomware and take a cut of the proceeds. And we're also seeing from our analysis that these affiliates are operating across different campaigns. So, for example, an affiliate of the Netwalker ransomware campaign might also use Revel or Sodinokibi ransomware, and that presents further challenges to law enforcement and the wider community. I think second, the double extortion methodology over the last 18 months has unfortunately been deployed with some success. So files are encrypted, but data belonging to the victim is also exfiltrated, and some is published on their blog sites. And this has just increased the pressure on the victim to pay the extortion demand. And I think third, we can't really discount the impact of the pandemic and the increase in sort of remote working. This has presented more cybersecurity challenges, and these risks associated with remote working need to be mitigated. But this has been sort of extremely challenging for professionals over the last sort of 18 months to 2 years. And I just want to caveat these figures that are on the graph on the screen now, and just to emphasize that this is very much a lower bound figure. The numbers here are likely to be much, much higher, as not all sort of ransomware payments are reported to the police and reported to Chainalysis. So this is what we know from our analysis and from our data, but it's likely to be much higher. Stephen, I'll hand back over to you here unless there's any questions.
Yep, and of course, some of this, these problems, specifically the issue of ransomware, has led to and fed into ongoing insurance problems. insurance problems that were already developing anyway, because as everyone knows, we're in what we call a hard market here, and so there's less capacity around generally. But specifically in the cyber area, what we've got are some insurers pulling out. We had Amlin last year, October, pulling out, citing profitability issues. We've had some insurers, for example, AXA, refusing to write the ransom payment cover. We've had higher retentions and excesses, sublimiting for certain ransomware issues, insurers requiring co-insurance with the insured, and of course higher rates. And we're seeing far more stricter underwriting requirements from insurers. For example, I was reading that AIG's cyber proposal now has an additional 25 security questions added very recently on the back of these issues. And unless you've got pretty good security, you're finding that you're getting very limited or potentially refused cover out there, and specific sectors like healthcare and education are suffering as they're seen as quite high profile targets for ransomware, and also an area where sometimes cyber defenses can be seen as lax. And so there are some various reports out there, but Howdens are saying that 70% now of US brokers are reporting capacity reductions into the carriers they place with. Are up 40% in Q1. Marsh is saying Aon have got similar figures. And interestingly, loss ratios, the Howdens report that's out there said that loss ratios had increased from 30% in 18 to 70% in 2020. Now, I imagine there are a lot of insurers out there who'd be quite happy with a 70% loss ratio. So this hasn't impacted everyone, all carriers to the same extent, clearly, but across the market, it seems like a 70% loss ratio isn't too bad. But nevertheless, that doesn't help insureds when they're looking for cover, and it's getting increasingly difficult to get. Now, Phil, I want to turn back to you for a moment, please. I know there are two specific areas where Chainalysis can really help in this space. And first of all is obviously tracing crypto assets, stolen Bitcoin or ransomware Bitcoin, tracing that through the blockchain. And then second, I know you can help out on the sanctions issues and de-anonymizing where these payments might be going to help the lawyers and the client work out whether ransomware can be, or ransoms can be safely paid without breaching sanction issues. We're going to get into that in a bit more detail, but before we do, let's have a look at the anonymity that blockchain can give, picking out as an example Bitcoin. But from a non-expert's perspective, you know, the footprint that a blockchain or Bitcoin leaves on the blockchain appears to provide no assistance if you're trying to track down where your ransom payment's gone. So you may be able to see it move through the blockchain system, but you've got no idea who's moving it, where it's going between. And of course, it can only be accessed through the use of a private key. So can you outline, please, Phil, what you and the Chainalysis are doing in this space and how you can de-anonymize the blockchain for something like Bitcoin?
Yeah, no problem, Stephen. So I'm going to try and avoid sort of the finer technical details, as unfortunately we just don't have the time today. But what I can do is send over the on-demand crypto essentials training by Chainalysis for everyone on the call today. And this will provide sort of a comprehensive introduction to the technology. And I think, as you said before, Stephen, what I'm going to do today is focus on Bitcoin, as we still see Bitcoin dominate cryptocurrency ransomware payments. So everyone on the call's probably heard the term wallet, and all a wallet is a user-friendly interface to the blockchain network. It basically manages the sort of cryptographic aspects of transactions and makes the technology easy for the user to use. And the best way, in my opinion, to learn about Bitcoin is to download a wallet application on your smartphone and buy a small amount of Bitcoin and maybe send that to one of your colleagues. It's how I sort of learned how to use the technology in 2014, and I'd highly recommend people to do so. But in basic terms, wallets allow you to sort of receive, transfer and store value. And whenever you make a transfer, your wallet software essentially broadcasts your transaction to the Bitcoin network. And a transaction looks like what you can see on the screen now and contains sort of several key components. A transaction hash, which is essentially sort of a unique identifier. A transaction also contains inputs and outputs in the form of what we call addresses. These are the long alphanumeric strings that you can see on the screen in front of you. And these are sort of analogous to account numbers and sort codes. And the inputs represent the accounts that are being debited from, and the outputs, the accounts that are being credited. And as you can see, there are very sort of small fractions of Bitcoin that are being sent as part of this transaction. And all these transactions are basically later processed by miners. And miners compete, they run different software to pull all these transactions into a block by essentially solving like a mathematical puzzle using their computing power. And each new block is mined approximately every 10 minutes and is mathematically linked to the previous block, hence the name blockchain. So there's no sort of central entity controlling Bitcoin. Instead, it's made up of a combination of various technologies and protocols which maintain sort of a distributed system through very sort of complex consensus mechanisms. However, blockchain data essentially just contains sort of that raw transactional data, what you saw in the previous screen, these sort of alphanumeric strings. And the good thing is that blockchains contain this permanent digital and public record of all the transactions that have ever been conducted. However, the data is structured, as I said before, in these sort of alphanumeric strings that provide no real information about the entities or the services that are actually behind these transactions. And there are literally hundreds of millions of Bitcoin addresses on the Bitcoin blockchain, for example. So cryptocurrencies shouldn't really be considered as anonymous, rather pseudonymous. Because once an address is attributed to a person or a service, you can use the blockchain to see their sort of full financial history, and that provides opportunities for law enforcement, for regulators, and for other industries. So as a company, we analyze this, what essentially is big data. And from our data, we can see that over 2/3 of Bitcoin activity actually involves a service. And this could be sort of a low risk service, such as an exchange or a merchant processor, or sort of a more high risk illegitimate service, such as a darknet market, a fraud shop selling compromised credit card credentials, or even a ransomware campaign. And just to clarify what I mean by an exchange is just an entity where someone can swap cryptocurrency for fiat currency or fiat currency for cryptocurrency. And they are sort of extremely popular. Some of the big ones out there, Coinbase and Bitstamp, for example. However, it's just important to note that Bitcoin pseudonymity makes it really difficult to know which addresses are controlled by each service. And we as a company at Chainalysis apply our proprietary methodology and algorithms to this big data set. It basically helps our customers trace assets to these services and helps them understand who they are interacting with on the blockchain. And we do this by identifying services via different transactions through a process that we call clustering. So each service, as I said before, is made up of these constantly changing set of addresses, and we essentially group these addresses together using our algorithms. Some clusters might just contain 1, 2, 3 addresses, while others might contain sort of literally millions of addresses. And often the large clusters with millions of addresses, for example, belong to exchanges, while the smaller ones with 1, 2, 3 addresses often belong to sort of private individuals. And we identify and attribute these clusters in various ways. One of them is just simply depositing cryptocurrency, Bitcoin, for example, into these addresses, and then linking them to services that have already been clustered by basically analyzing the flow of funds. And other sort of methods that we use is sort of information intelligence sharing with customers and partners, and more advanced intel collection techniques. So the result of this clustering and our analysis is that we've now attributed well over 6,000 services now on the blockchain, and this is constantly increasing. And we then group these services into different categories, as you'll see on the screen. So on the left-hand side, legitimate services such as exchanges, as I mentioned before, like Coinbase, Bitstamp, Square, Bitpanda, all of them are sort of law enforcement compliant. And then high-risk services, darknet markets, fraud shops, and ransomware. Of course, these are less compliant, not compliant at all, and these are criminal services that ultimately operate on the blockchain. Just my last slide in this section. So at the top, you'll see here what an investigation will ultimately look like without Chainalysis data. So as we've said before, you can see these sort of alphanumeric strings, addresses with funds being transferred between them. However, there's no attribution. If you use open source block explorers, for example, where you can just type in the address and see that transaction history, all you'll see is other alphanumeric strings. So you contrast this with if you use our software, and at the bottom you can see how de-anonymizing services that operate on the blockchain through the work that we do provides opportunities to trace these funds to specific services. And this is just a sort of a very basic screenshot of the WannaCry ransomware attack that hit in May 2013 and crippled the NHS. So funds were sent to WannaCry, and then you can see how they were dissipated to various wallets. And there are 3 services that have been identified from using our software: HitBTC, Shapeshift, and Chainalysis. And we'll get into a little bit more detail in relation to this with a demonstration later on, but that's sort of a higher level overview in terms of what we do and how we de-anonymize the blockchain.
Great, thanks, Phil. That's really interesting, and as you say, we're going to go into that in a bit more depth in a moment. I just got a question here, Phil. This is the question that's come in. When you refer to addresses, do you mean IP addresses or physical addresses?
No, Steve, it's not an IP address. By an address, if I just go back a few slides here. Okay, I mean, an address is here. So in Bitcoin, for example, they either begin with a 1, a 3, or a BC1. And these can be compared as sort of unique, compared to sort of unique account numbers and sort codes that are generated by your wallet software. And they're linked to your private key that's essentially managed by your wallet and you're in control of. So for example, if I want to receive funds, I'd use my blockchain.com wallet application, for example. I'd click in the application, receive funds, and I'd then generate a specific and unique Bitcoin address that is relevant to me. And then anybody in the world could then send funds to that address, which like I say, is specific to me and can only be accessed by me because I'm the one who has the private key that's mathematically linked to that public Bitcoin address.
Yeah, that's great. That's very helpful. Thank you. Well, we'll come back to that, Phil, in more detail. Thank you. I just want to switch now to Andy on the legal side. Andy, what does English law say about cryptocurrencies and specifically Bitcoin? and their status as how they're viewed in English law. You know, Bitcoin has only been around for, I don't know, 10 years or not much more, and English law has been developing on a precedent basis for hundreds of years, dealing with property. How do they fit how does the English court fit Bitcoin into that large body of case law developed 50 years plus before Bitcoin even existed?
Yes, thanks, Steve, and hello everyone, and good afternoon. Yeah, there has been a lot of uncertainty about the legal status of Bitcoin and other crypto, and in particular whether it amounts to property under English law. Now that question is important for a lot of different reasons, things such as inheritance, tax, who gets what in divorces, and also what we're looking at today in terms of trying to recover crypto payments, Bitcoin payments that are paid away as part of a ransom. Now, in November 2019, the UK Jurisdictional Task Force, which are a government-arranged committee headed by judges and counsel, they published a report setting out their views on this, and they concluded, yes, crypto is property. And then later that year, the question came up again in the AA versus Persons Unknown case. Now, Phil will be familiar with that one, given that was a case that involved Chainalysis as well. That was a case of an insurer seeking to recover a ransomware payment they had made. And in that case, the judge was considering this question, is Bitcoin property, when considering an interim proprietary injunction. We'll come on and look at those later on. And the judge relied on the task force report and said, yes, that's good law, and concluded, yes, Bitcoin and other crypto is property. That case has been followed in a few other cases, which we'll look at a little later on as well. I would just flag that that finding in AA and the other cases we'll look at is only at what we call the interim stage now, not a sort of final judgment at trial. In the interim stage, the bar is a little bit lower. You just have to show sort of a good arguable case. So technically, a court could later on, when deciding it on a full and final basis, decide something different. What I would say is, I think the judgment in AA and others are authoritative. It's backed up by the task force legal statements, and I think we're probably as confident as we can be now that a court, will still find crypto property. So what does that mean in terms of what we're looking at for today, and I guess how English law applies? Well, what it does is, with crypto being property, it opens up hundreds of years of English legal jurisprudence on property law, and in particular tracing and recovering property which you own but is now in somebody else's hands. And that's actually what we're talking about when we're talking about ransomware payments that have been paid in crypto. Although you have voluntarily, I guess, paid away that crypto for that ransom payment, you still retain beneficial ownership of it. The criminal just holds it on trust for you. So that crypto you've paid away as a ransom is still your property. Now, that fact and that crypto as property opens up a lot of additional and very useful remedies and tools that we can use to try and recover that ransom payment, even though we've paid it away, as part of minimizing our losses and a recovery action later on. So we'll look at those tools and a little bit more later on.
That's great, Andy. Thanks. So big takeaway there: the courts treat crypto and Bitcoin as property, and as you say, we'll look at that. That's really interesting. Now we're kind of building the blocks here between the legal side of things and the expert side of things about recovery of stolen Bitcoin or ransomware Bitcoin paid. So I just want us to take a slight divergence here for a moment, and let's deal with sanctions and the legality of making ransomware payments. Because if you are thinking of making a ransomware payment, and of course many businesses under attack have little option but to make the payment because these are existential issues they face, one of the things you've got to look at carefully, and often under a short time period under a lot of pressure, is the legality of making that ransomware payment and the risk that you are not only dealing with the ransomware problem, but if you pay the ransom, you suddenly walk into a legal problem with the authorities, whether we're in this case in the US or the UK. So Andy, can you briefly summarize for us where we're at on the legality of paying ransom payments, please, in the UK and the USA? And a couple of questions there. Is it broadly legal to make these payments? And if so, do you think it will remain so? Because I know there's a lot of current debate about whether these payments should be made illegal if they're not so already.
Yeah, while certainly demanding and receiving ransom payments, is illegal. It's generally accepted that paying a ransom payment is not illegal under English law, subject to a few specific exceptions. I've put up on the slide here what they are. Firstly, in terms of terrorism. So Section 15 of the Terrorism Act makes it illegal for someone to pay a ransom to the band if they know or have a reasonable cause to suspect that it will or may be used for the purposes of terrorism. Further, Section 17A of the Act also makes it illegal for an insurer to fund that as well if they had reason to believe that. The other exception is, as you mentioned, sanctions. Now, the UK's sanction regime is primarily now under the Sanctions and Anti-Money Laundering Act 2018. In the UK, it's the Office of Financial Sanctions Implementation, OFSI. They are the body which maintains the list of what they call designated persons, the entities and individuals who are subject to sanctions in UK law. And generally, under the UK sanctions regime, it's only if a payment is made to a designated person if you knew or had a reasonable cause to suspect that the recipient was subject to sanctions. They were a designated person, that it makes that an offence. So quite similar to the terrorism position as well. Did you have a reason to cause it was going to a sanction or a terrorism entity? Obviously, when we will look at this in a bit more detail shortly, but hackers, cybercriminals don't usually reveal who they are when they're demanding ransomware payments, and the addresses, as I just mentioned, or the wallets, who the account, if you want to call it that, who they are requesting payments to be sent to, is usually new every time, generated new for each individual ransomware demand. So how do we deal with that question of trying to decide whether this may be a sanctioned entity or you're paying this ransom to? Before I come on to that, and before Phil comes on to that, just in terms of your question, I guess, what the future holds. Well, in the UK, like you said, there has been a lot of debate about that in the last year. And you mentioned earlier on, Kieran Martin, the former head of the National Cyber Security Centre, raised this issue and sort of said insurers are even funding organised crime. The government is now looking at updating the Computer Misuse Act 1990 following a consultation earlier this year, and many have been urging the government to look at this question of whether all ransomware payments should be made illegal. And as part of that, the consultation is now finished, so we're awaiting the government's response to that. What will that response be? Well, the government and Home Office has previously sort of said, you shouldn't pay them. That's kind of the standard official response when it comes to these things, the standard official line. But I've not really seen any sort of strong noises that the government actually wants to ban them outright at this stage. And in terms of the USA, it's similar there at federal level. In the USA, as many of you know, it's OFAC, who are the body responsible for dealing with USA sanctions, designating and then enforcing. Similar in USA, there's not really been much talk at federal level, at least in terms of banning all ransomware payments. Some action at state level, I think over the last few months, New York, North Carolina and Pennsylvania, there's been moves at introducing legislation at different levels for that. I would point out that I think a lot of those are just looking at banning local government bodies from making ransomware payments as opposed to all private individuals. So I think overall, I'd probably be surprised if there's any movements to ban it in the next few years. I think, you know, the Colonial Pipeline attack really sort of showed there is a risk at national level at if you don't make these payments. So I don't think there's that appetite there at the moment. I think what I would say is one change I probably do see coming on through in the next few years in the UK and USA and EU level perhaps as well is mandatory reporting of ransomware payments that you make. There was a ransomware task force that reported to the US administration a few months back that included input from UK bodies. And that was one of their recommendations. They didn't recommend banning ransomware payments, but they recommended mandatory reporting of them. And I could probably see that happening in the next few years because there seems to be growing support for that. So just going back to, I guess, where we are now then. So if you are in this position of thinking about whether to make a ransomware payment, and but you have this question of who I am paying it to, are they possibly a sanctioned individual? Like I said, the test is whether you knew, or the objective test of whether you had reasonable cause to suspect that it may be going to that. That is essentially going to be a risk assessment with sort of what information you can get. And if I can pass that over to you perhaps now, Phil, just to talk a bit more about that in terms of what you can do to help identify whether the entities, and like you said, in terms of all we get when we ask to make a ransomware payment is just that address. How we can know whether that individual or behind that is subject to sanctions, and a bit more on I guess what you see with sanctions at Chainalysis.
Yeah, no problems, Andy. I think one of the points that you just raised there around sort of mandatory reporting, and yeah, that my sort of personal opinion from working at the National Cybercrime Unit and now working at Chainalysis, that we would be in a better position as sort of a global community if there was better information shared in relation to ransomware addresses. And I think the graph that I showed earlier on, that was very much sort of a floor figure. And the more intelligence that we receive in relation to those payments, the more we can actually sort of quantify and ultimately understand the threat. I think that sort of sentiment and that finding was also discussed in the Ransomware Task Force report that was released earlier this year, just to urge information sharing to improve across the whole of the ecosystem, industry, law enforcement, and the regulated sector. So just in relation to sanctions specifically, so just to clarify for everybody on the call that we provide software and data to companies, essentially empowers them to make decisions regarding the risk of sanction violations. We don't provide legal advice, we just provide data, and that data will hopefully help inform decision making around making a payment. So I think we can split sanctions violations risk into sort of roughly 3 categories. I think the first, specific addresses. So have funds been sent to addresses that have been designated by OFAC. So, for example, I think it was in 2018, OFAC designated several cryptocurrency addresses that were linked to the Samsung ransomware campaign. I think the second, sanctioned individuals. So recently, I think it was December 2020, again, OFAC designated individuals linked to the sort of infamous Russian cybercrime group Evil Corp. That was in relation to the distribution of Dridex malware, but as you'll see from open source reporting, they're believed to be also linked to ransomware crime as well. And then finally, jurisdictional risks. So heavily sanctioned areas such as Iran and North Korea. Just a quick example here. I think it's Serena and VoidCrypt ransomware, for example, are believed to actually emanate from within Iran. and we can support that with blockchain intelligence. So the table on the left-hand side, we can see some of the different strains of ransomware, and then on the right-hand side, there's some of the details regarding the potential sanctions, violations, risks. So as I said before, SamSam, addresses linked to SamSam ransomware were designated by OFAC. Pay to key, again, another Iran-based strain. WannaCry, as again you'll see from open source, links to North Korean actors, and then BitPaymer, Doppelpaymer, WasteLocker. All of these have some association to the cybercrime group Evil Corp, so there's some risk there if a payment was to be made. So on the right hand side, you'll see the graph, and basically here we've used our data to determine the payments to these campaigns which contain some sanctions, violations, risk. So if we look at 2020 and 2021, you'll see three different colors, and each represent a different ransomware strain. So Doppelpaymer is in purple, Clop is in yellow, and Phoenix CryptoLocker is in blue. And like I said before, all of these are believed to be linked in some way to the sanctioned cybercrime group Evil Corp. As we can see from the left-hand side there, on the y-axis, approximately $70 million of ransoms have been paid to these three strains in last year alone. So again, just aggregating all our data and working with our data scientists here at Chainalysis, we've been able to determine that last year, 27% of payments in 2021 were associated with some form of sanctions risk. And that was up from the previous year in 2020, where it's 15%, and the year before it was 8%. So this is just something to be cognizant of when making that decision as to whether to make a payment. Stephen, I'll hand back over to you.
Yep, thank you, Phil. Just got a question in. Now, Phil, I know you can't necessarily answer all questions here because there are certain kind of trade secrets, if you like, but see what you think of this, and if you feel it's inappropriate, we can leave it. But one of the questions in is what are the implications of cyber criminals using Monero? Now, Monero, of course, is a more recent cryptocurrency type. I think only came to light in about 2014, but it seems to be specifically targeted at increasing the anonymity that the users can have. Are you seeing that in your space? Is that an increasing problem?
Yeah, so the ransomware space, as I emphasized earlier, is still very much dominated by Bitcoin. And I think one of the main reasons for that is that, I've used Monero in the past for research and development purposes, and it's really difficult to use. It's difficult to source from sort of a regulated entity. So as an actor, if you're infecting a victim and then expecting them to pay, it can often be quite difficult for the victim to source those funds. And at the end of the day, if you're a criminal enterprise and you want to make money, you want to make it as easy as possible for the victim to actually purchase that asset. So I think that's probably why we are still seeing Bitcoin be predominantly used across ransomware campaigns. Of course, there's been other cryptocurrencies that have ultimately been used, and as a company, we are always working to establish sort of new methodologies in relation to that and how we can trace different assets across different blockchains. But like I say, the majority that we are currently seeing is very much for they are encouraging the use, the payment of extortion in Bitcoin.
Yep, thank you, Phil, and thank you for your outline of the sanctions part. Now, let's assume for the purposes today then that the client has successfully negotiated the sanctions issue between their lawyers and their experts, and move further into the kind of idea of later recovery of such a ransom payment, or at least the possibility of it. Now, Phil, I know you've got a couple of slides that are worth sharing on the prevalent strains of ransomware seen in action in the last couple of years, and the destination of cryptocurrency proceeds of that ransomware crime. And then you're going to, I think, talk us through, using your live demonstration, a kind of typical Bitcoin recovery play. So if I can hand that over to you, please, to walk us through that.
Yeah, no problem at all, Stephen. So, okay, we'll move on here. So, as I said before, we can utilize our data to look at various threats, and in particular, sort of ransomware. And this graph here, we can see the top 10 ransomware strains by revenue by year, and this goes all the way back to 2014. But you'll see 2017, before we started seeing like a real impact, and they started earning substantial amounts of money from deploying this type of malware. We started in 2017. We can see it was very much sort of dominated by BitPaymer and Dharma ransomware, but still the overall revenue was still under sort of $14 million by these entities. So if we fast forward 4 years to 2021, we're only in mid-September, and we're already at the 200 million mark. And we've seen over the past year the emergence of Phoenix CryptoLocker, which we can see in light green here, and the infamous dark side, which of course was used on the in the Colonial Pipeline attack, and that's in pink. So two of the prominent strains this year, and we can derive this insight through analyzing our data, and this goes all the way back to our clustering and our attributions that I went through earlier today. And again, because our coverage of our services operating on the blockchain is just so comprehensive, we can follow funds to these different services that operate on the blockchain. And this graph shows the destination of ransomware funds as a percentage traced to these services. So the orange color on the graph, this represents exchanges. So since we started collecting data in 2014, pretty much in pretty much every quarter, over 50% of funds have been sent to an exchange. So why the criminals send funds to exchanges? Well, Bitcoin continues to have relatively limited real-world utility, and as a result, we see crime groups moving crypto to these exchanges to either exchange for fiat currency and deposit the funds into a bank account, or alternatively exchange for another cryptocurrency. And this just forms sort of part of the money laundering process. And why is this important to us? Why is this data important? Well, exchanges mostly require their customers to provide ID documentation as part of their sort of know your customer obligations. And this is when customers set up an account on their platform. And of course, different exchanges have varying levels of compliance standards. But from sort of a law enforcement perspective, this provides opportunities, because law enforcement can make these sort of legal requests to these exchanges, quoting the transaction hash, quoting the addresses, and then look to obtain intelligence and evidence in relation to those specific transactions. And in some cases, they may even be able to seize those assets utilizing, well, in the UK, Proceeds of Crime Act legislation. But from sort of a more civil perspective, there are also opportunities for asset recovery. And I think Andrew has covered this earlier and is going to cover it in more detail after this sort of short demonstration, which I'm going to go through now. So this scenario does contain a real ransomware payment. However, the circumstances detailed here are sort of somewhat fictitious, although based on my experience of managing these types of incidents. So on the screen, you'll see sort of a very rough timeline. The victim is hit by a networker ransomware attack. A CIR company, a critical incident response company, are instructed and deployed to the scene. Victim later reports the incident to the ICO and the NCSC. Later finds that sensitive company data has surfaced on like an actor-controlled blog site. So this is the sort of double extortion technique which we spoke about earlier. CIR company find that backups have been wiped, and the company make that sort of business decision really to make the payment, and instructs a third-party company to negotiate on their behalf and facilitate that payment. As we can see here, the payment is negotiated down to 15.9 Bitcoin. They make the payment, they secure the decryption keys from the attacker, and the third-party company then provide a transaction hash to the victim company and the address that was used by the networker crime group to facilitate that payment. So what I'm going to do here is just come out of the screen. I hope this works, bear with me. Okay, and so first what I'm going to do is copy the transaction hash, this unique identifier here, into a public block explorer just to see what that looks like. Okay, so we just go blockchain.com, but there are various other block explorers available. This is just one of them. What I can do is just type in the transaction hash, well, type it in, copy and paste it in, and search for the transaction hash. So as we said before, a blockchain is essentially a public ledger. So we can type in that transaction hash and we can see the raw data in relation to that transaction. So on the left-hand side, we see the inputs, and on the right-hand side, we see 3 outputs. And one of these outputs here, 3D47D, is a 15.9 Bitcoin that's been sent to the networker crime group. But we can't really derive much insight. This is just raw data. It's difficult to really do much in relation to this. So let's try using Chainalysis Reactor. So this is our user interface. So the first thing I'm going to do is copy and paste that transaction hash into Chainalysis and review the transaction. Okay, so what we can see on the right hand side here, okay, the inputs where the payment has been made from. So in this case, it's the exchange Gemini, and the outputs which derive where the payments are being sent to. So we can see 3 different addresses, and one of those is the 15.9 Bitcoin that was sent to the networker crime group. So what we can do is add this transaction to the graph, and we can see 3 different entities. Bear with me: Gemini, Binance, and networker. So Binance isn't relevant to our investigation. It's just coincidentally, it's just been grouped as part of the transaction by the exchange when that payment was made. So it's not relevant to the investigation here. So what we can do is just delete it from the graph. Then we can see the payments from Gemini to networker, and the flow of funds between the 2 clusters. So as I said before, what we can do is use our data, our visualization tool in the back end, that we're just aggregating all this different data from different sources, and we can review the networker cluster. Okay, so first and foremost, let's look at the number of deposits, and we can see here there have been 336 different deposits into the networker ransomware cluster. So that's likely to be sort of 336 different victim payments that have been made. If we look at addresses, we can see there are 296 addresses that form part of this cluster. So again, using our algorithms and our sort of proprietary methodology, we've associated 296 addresses that we believe are all under the control of this networker crime group. If we just go to the bottom here, we can see that $56 million has been received by this cluster. So as we all know, ransomware is a very lucrative business. And if we just look at the time bar here, we can see that this cluster has been active between the 29th of February 2020 right up until the 8th of September this year. And that includes both input and output transactions. Okay, so now I'm just going to review the exposure summary here. So one of the features of Chainalysis Reactor is that we aggregate all of our data, and then we put this into a nice, easy to interpret exposure summary. And each color represents a different category. So just cast your mind back to sort of 40 minutes ago when we looked at the different categories within Chainalysis Reactor. So for example, the blue here, that represents exchanges, and the pink is mixing services. The sort of green color is threat actors. If we just click on the filter summary, we can see all the different categories. So depending on what our objectives are, we could filter those categories. For us, the most important thing is, in this example anyway, asset recovery. So we're only really interested in the blue, which is exchanges. Just a little bit about these exposure wheels. Bear with me. So the outer ring here, the outer ring shows direct exposure. So by that we mean a direct connection between this cluster and the source or destination of the funds. If we just click on the direct bit here, we can see Gemini, so that supports that. So funds have been sent directly from Gemini to Networker, but we can also see funds have gone from Kraken to the Networker cluster. So by direct exposure, it's just a single hop. It goes from Kraken directly to Networker, or Gemini directly to Networker. But Kraken isn't of interest in our investigation at the moment, so we can just delete that. And the inner circle, this shows indirect exposure. And this basically means that there's an indirect connection between the network cluster, and the first service that's encountered. And if we look at exchanges, we can see a range of different exchanges where these funds have effectively been dissipated to and sent to and eventually cashed out. But that means that it's not direct, so it's not just one transaction. There are sort of multiple transactions before it reaches one of these surfaces. So what we want to do here for this specific example is follow the funds that were sent to the Networker cluster on the 12th of November 2020. That was the date of the sort of the hypothetical scenario that I went through a few minutes ago. So we can just click on the transfers tab here, and we can see the sort of time bar. And we're only interested in the transaction on the 12th of the 11th, 2020. So we can just select that period, and we can see all the different transactions relating to the Networker cluster. So I'm just going to scroll down here and find our transaction. Bear with me, my internet is a little bit slow today. And we can see here the transaction that we initially searched in Reactor, and it goes from Gemini to Networker. And we can see the transaction hash and the details at sort of a higher level around that particular transaction. But we're interested where those funds have been sent to. So we look at the next transaction below in red, which denotes sort of a withdrawal from that cluster. And we can see that funds have been sent to this address here, 3DJNN. So we can just add that to the graph. And we can see that sort of 16 Bitcoin has been sent to the 3DJ address. Now, I'm going to use something here called our change detection feature. This is a little bit complex, but it's basically a programmatic way to use our software to identify other addresses under the control of this same actor in this same wallet. So I'm just going to quickly run this. And using our software, what we're basically saying is that all these addresses are all under control of the same entity. What I'm going to do is just merge those addresses into one. So we see all the funds are sent to this address, and we believe, using our advanced features, that they're all under control of the same entity. So now I'm just going to look at the different counterparties, and we can see here the different counterparties of this merged entity. And we can see, you know, there are a few of relevance, but we'll just add this address first, BC1QEW, and we'll add the third one down as well, BC1QSC. So funds have then been sent in 2 other transactions to 2 other addresses. And then again, using the exposure summary here, we can see that funds have actually been sent to the cryptocurrency exchange Bitrex. So we can add Bitrex to this graph. Just hide that connection there, because that was just showing the link between Bitrex and Gemini. We can see the funds. So we've traced approximately 14 Bitcoin to the Bitrex cluster. If we just toggle here using the E key, we can see the timeline. Now, I'll just go back a little bit here, because what we can see there is 511 Bitcoins been sent from Gemini to Netwalker, and we know we're only looking at 15.9 Bitcoin. But the reason for that is basically that, you know, different third-party companies or victims have used the Gemini exchange to pay the ransom demands to Netwalker. So our specific transaction from 12th of the 11th is just one of many that totals 511 Bitcoin. But what we did before is basically trace those assets out of the Netwalker cluster. And again, if I just draw your attention to the date, we can see that on the 12th of the 11th, 2020, it goes to essentially intermediary wallets before being cashed out at the Bitrex exchange. So I hope that provides like a good overview of how our tool can be used to trace assets on the blockchain. And here's one I made earlier that's just a little bit neater with some annotations and nice pretty colors that just shows that the payment, the flow of funds. I've renamed this as a withdrawal wallet to intermediary wallets, and eventually the funds end up in the Bitrex exchange. Stephen, I'm not sure if there are any questions in relation to that.
Not specifically, Phil, at the moment, but we've got a couple coming in that will probably tidy up towards the end, I think, because I just want to move on to the legal issues. Phil, thank you for that explanation. Very powerful tool in terms of de-anonymizing what's going on. Now, of course, any recovery asset is a kind of combination of legal skills, or legal skill set, I should say, and obviously experts like Chainalysis. And if we're going to trace Bitcoin, we need to get in front of a court to get court orders of various types, which Andy is going to tell us about. But you know, we need the basics, a minimum level of evidence to demonstrate to the court why we believe that certain Bitcoin in that exchange, which may have been through 30, 40, I don't know, different transactions before it gets there, why that's our Bitcoin, or why we should be entitled to get hold of it. So let's turn to Andy now and some of the legal issues. And Andy, I know that you've been a close follower of the English courts judgments on these types of cryptocurrency related judgments in the last couple of years. Can you walk us through, please, the key takeaways from those English cases in this space, and how the English courts are using what is jurisprudence developed over the last couple of hundred years, how they're applying that to the issue of cryptocurrency and specifically Bitcoin?
Yeah, certainly. So in Phil's demonstration, he showed that there was a ransom payment of, I think it was 15.9 Bitcoin, and using that software, they've been able to trace the onward transfer of that to a wallet or an address linked to the Bitrex exchange. Remember what Phil said earlier on, exchanges are where you can essentially cash out your Bitcoin or crypto into fiat money, into real currency. And that is a common route we see in criminals in terms of what they want to do with ransomware payments. And in terms of recovery for us, going to an exchange can also be very useful for us due to some of the developments in this area in English law in the last few years. Firstly, in terms of since the beginning of last year, all exchanges that are based in the EU now are regulated by the AML and Know Your Customer regulation. So they're required to take identification information from the clients. So in Phil's demonstration, if that wallet linked to Bittrex, if that's regulated and is subject to that, we can Bittrex will hopefully have information on who holds that wallet that we can see that 14 Bitcoin is now in, which has come from that ransom payment. The other sort of main area of useful development for us is the case law. I put a few of the sort of main ones on the screen here. As I mentioned earlier on, AA has been very useful in deciding that crypto is property, including Bitcoin, and what that opens up in terms of recovery action, which I'll come on to in a moment. That case also is good precedent for allowing anonymity orders and private hearings for recovery actions. That's really useful for stopping any revenge action or taking off of the individuals if they're trying to move that crypto on again. And other useful ones I'll just flag up here. Iron Science, I think that was another Chainalysis case. That was useful for showing that the decision in that case was the lexitas. That's the location of cryptocurrency when it's paid legally, is at the place of the business or their residence, if it's an individual, of the owner of that before it's paid. Now that's really useful for us for recovery actions if that person or business is in the UK, because that really increases the chances of us persuading the English courts to deal with the recovery action and all the useful tools we have for that. That case also was helpful in terms of finding that a banker's trust order can be served on a foreign exchange outside of the jurisdiction. I'll come on to that in a moment, why that's useful, because a lot of these exchanges are based abroad. So just going on to the next screen then and talking about, if you are looking at making a recovery action, what your claims would be. So these are the typical claims you would have. What I would highlight here is the knowing receipt and the equitable proprietary claim, or sometimes known as an equitable tracing claim. They are what we call proprietary claims, but we can now use for crypto recovery claims because of that decision that crypto is property. Now, proprietary claims are distinct from personal claims, such as the conspiracy claim here. With personal claims, you are just saying essentially, please give me damages to compensate me for the loss of my property. So if we paid away 1 million in Bitcoin in order for damages to compensate me, for that loss, that's probably not going to be particularly helpful, in order for damages against some unknown criminal in North Korea. So what the proprietary claims allow us to do is, what they are saying is, okay, that property, that 14 Bitcoin that Phil is now traced to a wallet held at Bittrex, that is still my property. And if I can identify that using the evidence that Phil's just shown, I can now get that back. That is still my property, potentially even if it's gone to a third party. So I don't need damages instead, I just want that Bitcoin back. So just in terms of, I guess, how we do that, obviously you all know the English courts take months, if not years, for these claims to get through to trial and judgment. In that time, there's a clear risk of the criminals or whoever holds that crypto now in the wallet that Phil's traced, moving that on again quickly. So we want to avoid the risk of that. We would also like information on who holds that wallet as well, in terms of proving our case against them and the question of whether they might be innocent or not. So how we deal with that is over onto the next slide. These are the tools available for us for that. So firstly, we've identified from Phil's analysis that 14 Bitcoin have gone to out of the ransom payments have ended up in a wallet linked to Bittrex, the Bittrex exchange. So what we want to do is we want to freeze that Bitcoin there, so we can try and before it's cashed out or transferred on, so we can try and recover that later on. And the way we do that is by applying for an interim injunction. Now we can do that as quick as possible. We can get an urgent application heard within days, if not hours, for that once we've identified that Bitcoin held in that wallet from the ransom payment we've made. The application is made without notice, and like I said, it can be made in private, so there's no tipping off. There are two types of injunction we would look for there, but I've set up briefly the test for each here, which I'll just pick up some of the points. Firstly, freezing injunctions, also known as worldwide freezing orders. They're essentially orders that freeze all of the person's assets up to a certain level. Briefly, some of the key issues to that. All you have to do to obtain one of those before trial is show a good arguable case. That's a fairly low standard. We would just be using evidence such as, look, we've made this ransom payment, we got this demand, and Chainalysis software showing where it is gone. We also have to show a risk of dissipation. So that is a risk of that Bitcoin being cashed out or lost if we don't freeze it. Now, the case law I mentioned is shown that the judges will readily agree these type of cases, ransomware cases, there is always that risk when you're dealing with unknown persons abroad, and you don't know what what they're good for or what they're going to do, and they've already, Phil's evidence shows that they've already passed it on a few times. And in terms of proprietary injunctions, now these are orders that actually freezes specific property, no matter who currently holds it. So that's really useful for when it has been transferred on to somebody who, as in Phil's case, a wallet linked to Bittrex, and we don't know who owns that wallet. Some of the requirements I'll flag here. You just have to show a serious issue needs to be tried. Again, a fairly low level, similar to a good arguable case. So again, you'd be using the Chainalysis evidence to say, look, I paid this 15.9 Bitcoin. It has gone on to this wallet address that now holds 14 Bitcoin of it linked to Bittrex. And you're also having to show that the damages are not going to be adequate instead. And again, that case law I mentioned has been really useful in that regards, and showing judges in these type of cases are very willing to say, yeah, you're probably not going to get any money back at the end of it unless we freeze that Bitcoin, that crypto that you've managed to trace. So those are what we were doing in terms of, I guess, the protective measures. And then we have the disclosure orders on the right hand side here. So what we want to be using these for is to try and obtain the information on who holds that wallet now, which holds some of that Bitcoin that has come from our ransomware payments. We did that firstly to pursue and prove our claim, and secondly to identify them. We might be able to use that information to find other assets we might have, which we might want to freeze and recover against as well. If for example, in this case, there might be a shortfall on the crypto that we've not managed to be able to trace. So, as I mentioned earlier on, many exchanges are now subject to AML and Know Your Customer regulations, both in UK, EU, US, Japan, Australia. So if the crypto that we have managed to trace is linked to a regulated exchange, what we would be doing then is applying for one of these orders for disclosure against that exchange for them to provide that information, requiring them to provide that information they have on their customer, who holds that wallet address to us, who holds that Bitcoin now from the ransom payment we've made. There's 3 different types of disclosure orders there. I won't go into any detail. Bankers trust orders, you might recognize them. They're the orders that you get against banks to get client information. Norwich Pharmacal orders, those are the type of orders that you can make against any third party to get information that you need to prove your claim against someone else. And so they're disclosure orders, but they often come with the injunctions. So what I would just also mention as well, that the case law helpfully shows, is courts are also really willing to sort of bend over backwards and help in recovery actions. they know what's going on here, and they're willing to make things such as orders for alternative service, so that we can serve injunctions and disclosure orders on exchanges to freeze that information, to freeze that crypto before it moves on again quickly. Particularly as a lot of the time these exchanges are based outside of a jurisdiction. I think it's only Coinbase, one of the major ones with a UK presence. So again, that's really useful. So how does, I guess, bringing that all together, how does that kind of look in terms of a recovery action? Just on to the next slide. So this is kind of, I guess, how it all looks all together. So we're the applicant on the left-hand side here. So we've paid, in this case, just shy of 16 Bitcoin. We managed to trace 14 Bitcoin of that to a wallet linked to the Bittrex exchange. What we would be doing then is we would be applying for those freezing injunctions and against the exchange and the persons unknown. The persons unknown being the holder of that wallet we've traced some of the Bitcoin to, and we'd also be applying for disclosure orders against persons unknown and the exchange as well. So in this case, Bittrex. Now, what the injunctions will be doing is requiring the exchange, in this case Bittrex, to freeze that 14 Bitcoin that we now hold in that wallet linked to their service. That protects us for any later recovery actions, so it can't be cashed out or transferred on. And what the disclosure order is doing against the exchange is that's requiring them to provide identity of that account holder, that wallet holder. We then use that information to firstly, serve proceedings on whoever holds that wallet to pursue that claim against them, look to see whether they're innocent or using Chainalysis software linked to who demanded it in the first place and who it went to in the first place. And then, like I said, that information also might reveal they may have other assets we might want to look at enforcement action against as well if there's a shortfall. So we use that information then to pursue to a final remedy or a settlement earlier on, which has happened, and I'll come on to in a moment. And then pursuing that to a final remedy, proving that's our property, proving that's our crypto and the way it's been paid, to then enforce it against that frozen crypto and any other assets that we have managed to identify. So that's, I guess, probably in a maybe a bit of a simple nutshell how it would all work. And I can see one of the questions earlier on from Chris was about the point that there has been a lot of multi-million-pound ransomware payments paid, including by insurers, and not a lot of mention of recoveries as yet, and why that may be. There are all sorts of reasons why it may not be possible, or it may be too difficult once we look at it. So there are various things we would have to have a look at first. Firstly, we need to have a look at what the crypto it is. Phil talked about earlier on a little bit about Monero, and some cryptos such as that can be harder to trace. We'd also have to look at the type of wallet or address it has gone to, whether it's hosted by the exchange, which will be much easier to recover it later, or whether it's custodial or non-custodial wallet. That kind of information we need to know as well. Other things such as, it can depend how many times it's been mixed or how many times it's been transferred on. If it's been mixed with other crypto as well, that can affect things. Like I mentioned earlier on, that wallet we've traced the 14 Bitcoin to, they may be, or they may say they're innocent and nothing to do with the original ransomware attack. There's a legal question at the moment of if that is the case, if they are truly innocent, whether we can still recover that from them. And also, of course, there's things like cost as well. There's a lot of work to do up front on this in terms of applying for these injunctions and doing this tracing work. So the smaller sort of ransomware payments may not be viable for recovery. But what I hope this kind of shows essentially is this is an option for you if you have made a ransomware payment, or if you've been a victim of crypto fraud and paid away crypto. This is an option for you to consider and have a look at. just because you have paid away that ransom payment or lost it doesn't mean that's the end of it. And if you act fast, it can potentially be recovered to reduce your outlay. So I hope that kind of brings it, I guess, all together in terms of how it would look on a legal action using the tracing evidence that Phil has shown.
Thank you, Andy. That's very helpful. Cognizant that we've got about 4 minutes of our original hour and a half allotted, so I think we're gonna have to draw this to a close. There's a number of questions I apologize we haven't got to. I've just got one question. Let's just take this quickly, probably for Phil. Can't quite read this on screen, but the gist of it is that Ethereum, Ethereum is becoming more practical for use than Bitcoin. I assume they mean by that the utility of it and the ability to buy genuine non-criminal products with it. Is there any increase that you've seen of ransomware requiring payment in Ethereum instead of Bitcoin? And if you have, or if you haven't, do you think there might be an increase of that use in the future, Phil?
Thanks, Stephen. So obviously I don't have sight of everything that I used to when I was in law enforcement. So working in industry now, I'm not fully aware of everything that's going on in the most recent reporting. However, I've not seen Ether on sort of the Ethereum blockchain be used in any ransomware demand. That's not to say that it hasn't been, but I think there are some nuances with the technology and some significant differences. If you think of Bitcoin as decentralized money, then there's an argument that that Ethereum provides sort of decentralized computing and different programs, decentralized applications can then run on top of the Ethereum blockchain. So very different use cases, but no, I'm not aware of ransomware crime groups utilizing that specific cryptocurrency.
Yeah, great, Phil. Thank you. Okay, well, look, we're at the end of our allotted time. Let me just try and pull this together in a couple of sentences, and then we'll let everyone go for their evenings. Hopefully, where you are is still a nice sunny evening. It is down here in London. As Andy's highlighted some of the legal tools we've got, and obviously Phil has kindly taken us through some of the expert tools, this really is an issue of meshing the two together. We're not saying this is a panacea for all stolen Bitcoin or ransomware Bitcoin or other cryptocurrency paid, but what we're saying is don't necessarily assume that it's the end of the road when you've made this payment or lost this Bitcoin. There are potential avenues. They're not cheap. The legal costs of these injunctions are not cheap, and as Andy indicated, you probably need to be looking at £500,000 or £1 million worth of losses to make it worth your while. But you can take a look at these options. There are tools out there, both legal and expert, that can potentially assist, and there have been recoveries out there, including some of the cases that Andy has referenced. And that pinch point is that, as Phil says, at some point, these people want to spend this Bitcoin, and it's quite hard to spend Bitcoin easily in the ecosystem. If you want to go out and buy a Porsche, unless you're buying a Tesla perhaps, you need to go and get some cash. So you've got to put your Bitcoin through an exchange, and increasingly those exchanges are becoming regulated. A lot of those exchanges are helping in these recovery actions because even if they're not required to by the courts, they want to clean up their act. There will always, no doubt, remain exchanges on the fringes which particularly appeal to criminals because they won't assist in recovery efforts. But there is the potential of that pinch point that if through experts like Chainalysis you can trace that Bitcoin to that pinch point, that exchange, then that's when you can potentially use your legal tools to freeze it and get that money back. So we'll leave it there for today. If there are any follow-up questions, please get in touch with any of us on the contact details provided, or through Beale & Co. We can get you to Phil if necessary. And once again, thank you for your time today. We're very grateful for that. And I'd like to thank Phil and Andy for their time. It's been a very interesting discussion. And we'll leave it there for today. Please tune in for the next 3 or 4 sessions coming in this autumn masterclass series. All the details are on our website. Good evening. Thank you.